We are so that you're going to have to take risks, but we've been given the gift. That whole retirement crisis video that I did way back when, I said, listen, the gift is crypto. That was 2016 or something. And that gift is the gift that keeps on giving. It is everybody's chance to get ahead. It's so important that you don't mismanage the opportunity. Many people did that in the last cycle, and I'm trying to help people this cycle. Own the main assets. Don't trade around. Don't have FOMO. Don't use leverage. Just hold it. Just give yourself 10% of your bag, or 20% if you're really a true degen, to allow yourself to invest and lose money and try and make money in the 100x's. But don't touch your other stuff. The Everything Code is really all about understanding that they are paying the interest on the debts by issuing more debt, and that ends up in the bank balance sheet. It was also the understanding that the world has become entirely cyclical now. The ISM cycle is perfect from one to the next. So we've got this amazing 4-year cycle. It's actually 3.5 years. And that was in fact driven by debt maturity. What we found is that after 2008, 2008 was a great reset, as we know, but it was also a debt jubilee. All of the major central banks around the world agreed to forego interest payments. That's what zero rates are. So they said, we don't need to pay interest payments because we need to rebuild our balance sheets. So they rebuilt their balance sheets by refinancing in the 3 to 5 year sector. And that's created this perfect cycle, which is the presidential cycle, the Bitcoin halving cycle. It is the Everything Code cycle. And that cycle drives everything. It's why I've been able to do so well in predicting where markets are going, because that cycle is the liquidity cycle, the debasement cycle. It's all one thing, and it drives assets. Once you understand that, you understand most of the game that lies ahead. Now, this is not the first time this has happened either. The 1950s were remarkably similar. This time around, it wasn't a demographic bust that caused it and the debts that came because of demographics. The last time around, it actually came from, obviously, World War II and those debts. But what did the governments do? In the US, they imposed yield curve control, which is financial repression, which is the same as adding things to the balance sheet. So they kept interest payments low. The economy, they restructured debts. The economy became perfectly cyclical, just as it is now. It's almost identical. And asset prices correlated entirely. So they ripped higher, corrected every cycle, as they're doing now. So that whole 1950s thing actually plays out perfectly in the equity market. When I look at the chart of now versus the 1950s, it looks very similar. And when I zoom out, it kind of suggests what's going ahead. You see, in the 1950s, their piece of magic was to keep financial repression going, keep the cycle going until productivity increased. And eventually productivity increased, financial repression helped to wear down the debts. And over time, the economy took off, and we had the 50s and the 60s and then into the 70s. And that was a magic period for GDP growth because of what they did. And they're repeating it now. It's very clear to me that that is the game. That is the game the Japanese are playing, the game the Europeans are playing. Everybody's playing the same game. So we know the game. We know debasement of currency is the other game. So here we know that if we don't play their game, you're going to get if you invest in assets that don't beat the balance sheets, the 15% a year, you're going to be losing money every year. So it's really important that that is your hurdle rate. And when you look at that, you suddenly realize
Over the last week, Bitcoin investors enjoyed much profit as the crypto asset gained 9.4% to trade above $72,000 based on data from CoinMarketCap. Currently, most of the Bitcoin market is highly expectant of the potential large price gains that the current bull cycle could present. However, commenting on the immediate future, Bitwise CEO Hunter Horsley has stated that the upcoming halving event is a key part of the bull cycle, could be the most significant in Bitcoin's trading history as a result of an impending massive massive decline in the token supply. Bitcoin price to impact supply and token demand is what the Bitwise CEO had to say. In a post on Twitter on March 29th, Hunter Horsley shared the Bitcoin halving event slated for April 2024 could have the most profound supply and demand effect recorded ever in the asset's history. For context, Bitcoin halving is a phenomenon that occurs every 4 years in which the block reward for BTC miners is reduced by half. The April 2024 Bitcoin halving may be the most impactful one we've seen, and the last Bitcoin halving 2020, Bitcoin was at around $9,000, so the supply reduction in dollar terms was $9 million a day and $3 billion a year. This time, this halving with Bitcoin at $70,000 per Bitcoin, it will be guaranteed more than 3 times in terms of dollars, which would be like $32 million a day and $11 billion a year. A much larger reduction of natural selling at the same time as we are seeing rising demand, and that's why the price of Bitcoin goes higher and higher. Horsley began his prediction by referencing the last halving in 2020, during which the Bitcoin's price was around $9,000, and Bitwise CEO stated that Bitcoin experienced a significant decline in token supply following the halving effect to the tune of $9 million per day and $3 billion per year. Considering that Bitcoin's price currently hovers around $70,000, Horsley believes that the expected supply reduction will likely be at least 3 times larger in dollars and is estimated to be around $32 million per day and $11 billion per year. With a higher Bitcoin price, Horsley predicts that the expected massive decline in Bitcoin supply will be accompanied by a greater decrease in natural selling pressure by miners, and in addition, the Bitwise CEO noted this development will coincide with the current rise in institutional demand. Generally, all factors highlighted by Hunter Horsley indicates that Bitcoin will likely experience a magnanimous price surge following the halving event earlier in Feb.
Most assets don't beat it. The S&P doesn't really beat it. Gold certainly doesn't. Real estate unlevered doesn't. Most things don't beat that debasement. So if you invest in other things, you're going to lose money. And that's a hard lesson for people to learn. Most people don't understand this simple fact, is you are getting poorer by investing in these things. And that was the big realization that got to me. It's like, oh my God, my whole macro world has been turned upside down. Because everything we thought was the investable asset became the non-investable asset. And everything we thought was non-investable because it was riskier became the asset. Because when you look at everything versus the Fed balance sheet as a simple example, there's only 2 assets that have gone up. And I've talked about this at length before. It's technology and it's crypto. Since I first started talking about Bitcoin, it's up 450,000%. Most people just still don't get why I care about this. It's because it's the only way I see to truly give yourself the opportunity. And this is, you can see this behavior of investing in risky things by the speculative economy that has taken hold that people can't understand. It makes total sense to me. If your future is because you're young, you are going to do what you're supposed to do, buy your 401k, that kind of locks it in because it's not underperforming the balance sheet, it's not outperforming. So that's savings. Okay, I get that. And it's better than saving in cash. But everybody knows they can't get ahead. So people have become speculative. Speculative is okay if it's not at the casino. If it's in a secular trending market like crypto technology, go for it. Just do it in the right way. So we see the rise of not only tech investing on Robinhood, but option investing on tech in Robinhood. That's the way, the lottery ticket economy, where people just don't feel like they have a choice. There's no way for them to get the 100, 200, 300 grand that they need to get in the property ladder, or to feel like they've got the savings they need. So people are taking bets, but in a secular market, actually pretty intelligent risk taking, and options are pretty intelligent too. Over time, if you get it right, you have the right tools, you learn how to invest. It's one of the core things that we do at Real Vision is try and teach people how to do this. You can make money. Crypto has been even easier because the sheer magnitude of the moves means you just buy and hold it. You just own the highest quality assets and do nothing. I mean, doing nothing is really that easy. Has been basically giving you about 100% a year returns for the last 7 years, 8 years. It's actually higher if you go back earlier in Bitcoin's time. But if you basically look at that, you're going to get somewhere between 80 and 200% returns, depending where you are on the cycle over time. So these are the compounded returns. These aren't just, year in, because obviously some years you're like 500% returns and other times you'll make down 70%. People don't get their heads around, but this is actually the best risk-adjusted reward asset of all time. Fidelity have this beautiful chart of all of these dot plots of risk-adjusted rewards of assets. And there's tech is quite high and, some markets are high, and then cyclical stuff like oil and stuff is low risk-adjusted returns over time because it doesn't really do anything. All of this, S&P, all in this. And then you go and there's a blank paper, and somewhere right at the top is a dot that says Bitcoin. It's a f***ing alien. We have never been given an asset like crypto that has this risk reward by any yardstick. Drawdown versus, drawdown risk, volatility adjusted, any way you want to look at this asset, as long as it's over a period of time, it's by far and away the best asset we've ever been given. It's also the best performing asset of all time and remains the best performing asset. Every 4 years of that everything code cycle, Crypto Spring, which was last year, best performing asset in the world. Crypto Summer this year will be the best performing asset in the world. Crypto Fall next year will be the best performing asset in the world. Crypto Winter, which is 2026, will be the worst performing asset in the world. It's kind of simple.
Earlier in Feb, the Bitwise boss predicted that BTC could attain $250,000 sooner as a result of investor demand driven by the introduction of the Bitcoin spot ETF. When at now at $70,000, Bitcoin is at crazy levels. Just imagine that going up almost 4 times to $250,000, it would be massive for everyone who owns Bitcoin. As of today, Bitcoin is trading at around $71,000 and the widely acclaimed digital gold is up now by 10.4% on its monthly chart following the price correction in Feb. And meanwhile, the Bitcoin's trading volume has declined by 23.6% and is valued at $24.6 billion. With a market cap of $1.1 trillion, Bitcoin ranks as the largest cryptocurrency in the world. The impending quarterly expiry of Bitcoin and Ethereum options contracts worth several $1 billion could breed bullish price volatility according to observers. On Friday, the world's leading cryptocurrency options exchange will settle quarterly contracts worth $15.2 billion. Bitcoin options accounts for $9.5 billion or 62% of notional open interest due for settlement, while either options comprise the rest. The $15 billion expiry is one of the largest in the exchange's history. The expiry will wipe out 40% and 43% of Bitcoin and Ethereum's total notional open interest across maturities. The going market rate of around $71,000, Bitcoin options worth $3.9 billion are set to expire in the money. That is 41% of the total quarterly open interest of $9.5 billion, which is due for settlement. Similarly, 15% of Ethereum's total quarterly open interest of $5.7 billion is on track to expire in the money, as data from Deribit shows. These levels are higher than usual, which can also be seen in the low max pain levels. The reason is, of course, the recent price rally.